we're saying that the second half officially starts today. It's the end of the holiday weekend. The tax bill's done. The tariffs are still looming. Earnings about to start, and stocks are at record highs. That's how the table is set. So, Joe, how does the table look?
Okay, so the table in the near term still looks good. Momentum names still holding serve. Axon, Palantir, higher today. Mag 7, I know we're going to talk a lot about Tesla, but how about Amazon, which to me looks like it's breaking out. It looks like it's going to go above 2.25. Meta remains strong. That's the moment. That's where we are right now. However, my expectation for the third quarter is, at best, we're flat to lower. And I think one of the reasons why is going to be about July 15th. What is July 15th? The start of the earnings season. July 15th, we're going to hear about earnings. We've been lowering the estimates for earnings. I think we are going to learn that corporations have absorbed the tariff cost, and that is going to see significant margin compression. The inflation from tariffs, it's not showing up in the inflation report. So it's going to show up somewhere. And I think it's going to show up in margin compression. It'll be okay if you get the revenue growth, but consumer discretionary, consumer staple, I think you're going to see earnings growth year on year that's going to be down. I think the biggest challenge we have in front of us is going to be earnings.
You know what else is July 15th? This is to buttress your point, is June CPI. And we have not seen the tariffs show up in the inflation numbers yet. I mean, if it's going to show up, it's got to show up then. I'm just accenting your point, Joe.
Okay. The commentary this morning, Pasquarello at Goldman, it's still a bull market, yet one that is delivering less convexity and less consistency than before. Core positions that I believe in and would marry as a composite: U.S. technology and U.S. power, steeper global yield curves, a somewhat weaker dollar, and don't fight the primary trend in gold. Morgan Stanley's Mike Wilson. Weiss, a tougher first half, what we just went through. Yep. Better second half, better 26. Could be some consolidation, he says, during Q3. They're bullish on a 6 to 12-month horizon. He thinks that earnings tailwinds are going to expand, not contract.
Yeah, I'm going to disagree with him. So I agree with Joe that up until, and Jim makes a great point on CPI, because I don't think you have to see it in July 15th, and I know that's what you meant, but I think it's likely you start to see it, and not only from a cost input affecting margins with companies, but also from a demand input. So you've seen a lot of pre-tariff buying by consumer, by corporations, pre-supply chain stocking, and that's going to run out at some point. If you go to buy a car, they say, despite tariffs being announced on cars and in place already, they say you can get pre-tariff prices now. So they're trying to drive demand. That's going to run out eventually. The reason why I disagree in the second half is because I do think inflation takes a foothold. I do think that we're going to run out of time on delays, and that all the good news on tariffs, like with the tax bill, whatever he calls the bill, being pulled through into the market, which is the reason for the sell-off today. I would hardly call this a sell-off how we've gone. But I think that all the good news from the Trump administration has already been seen and discounted in the market. And now
all of it?
I believe so. I'm saying in terms of stocks, for example.
Well, I know what you're saying. I mean, what else would you be saying in terms of whatever else?
In terms of, for example, the deduction of capital expenditures up to, I think they've raised it to $4 million, that if it's put into use in the year you buy it, that will show up in some of the companies in there when they report, not this quarter, but going forward.
Well, Weiss, how can stronger economic growth that they think is going to happen as a result of the bill and deregulation and tariffs not being as bad as once feared, how can that all be in the market already?
Because the market's trading at record highs. It's trading above what we viewed as a troubled valuation area a year ago before this, and the fundamentals don't support. We are starting to see a slowing in the economy. If you work through all the, basically what they're saying is, this is going to drive tremendous growth, you can't get away from the fact that prices are higher, that they still don't have tariff deals. And while they don't have tariff deals, at some point, he's going to have to not extend the tariffs, but actually deploy the tariffs, which will affect pricing and demand.
They're making a big bet on classic supply side economics.
That's exactly right.
You flood the zone with the opportunity to spend more, make more, reinvest more, and thus earnings grow more, the economy grows more, and that what looks relatively expensive today to some in terms of the multiple of the market, like Weiss, actually isn't, because you are at the beginning of this more prolonged growth period than not. That's the argument.
You just used the term supply side, and I've got to say, in the last several months, that's the first time I've heard somebody say it, and that's exactly what it is. This is supply side economics. Now, we can debunk it based on history, but here's what I think is going to happen. First off, in the short term, Joe's right. We got the Treasury about to refill its coffers with the debt ceiling lifted. You've got seasonality coming in August and September. I wouldn't be surprised if the third quarter is lousy, but
and that's healthy.
Fine. But I think we're going to end up the year higher by meaningful amounts than we are now because of what, Scott, you just mentioned, which is that this is a pro-growth budget bill. Now, Steve, you're right. We got some serious questions about what, no, hang on. We got some serious questions about what the tariff deals are going to be. And if this extends this question, this uncertainty past August 1st, we're going to have problems because companies have hesitated on hiring. They've hesitated on CapEx. Even giving the extra CapEx expenditure, that is a huge benefit, but if we don't have the deals in place by August 1st, they're just not going to know what to do. I think they will. I'm just going to finish really quickly, Steve.
Go ahead.
I think they will get these deals in place. They know they need them, and after that, this CapEx expenditure is very pro-growth. Next year, earnings are estimated to grow 14% year over year. I think they will.
Okay. Let me clarify my position. I'm still fully invested. I haven't taken anything off whatsoever. I still think that's the path of least resistance. All I'm saying is that I think we will have a softer earnings period. To Joe's point, earnings estimates typically get cut 3% going into every period.
I mean, they've already come down. Now the bar's lower.
Right. The bar's lower.
Now you don't have to jump so high.
But that's for this quarter. Guidance for next quarter, I think, is going to be somewhat muted because you can't guide. You don't know what tariffs are going to be. You can't take the word of the administration. How many times have we heard that I've got 20 deals this week that are going to sign? So until you see the whites of their eyes, so to speak, you're not going to take that out of the market. So my point is that we're going to see, because of higher prices, and we'll talk about the airlines later. We could see it in other goods as well, and services. Keep in mind, you're taking a lot of the population, the immigrant population, out of the workforce. You know, the deportation numbers aren't as large as we saw under Obama or Biden so far, but they will exceed it. But they're scared, they're hiding. So that's going to be wage inflation. So there are all these knock-on effects. Yes, the bill is pro-business, without a doubt. It's pro-growth. And the continuing threats on Powell, if he does fire him, doesn't have the right to, I think that could lead to something positive. But the point is, I think that everything right now is being seen through rose-colored glasses, and I don't believe that's the right stance.
Well, I mean, the people wearing the rose-colored glasses are saying, I've heard the coulda, woulda, shoulda for months.
The rose-colored
and it hasn't happened.
At some point it does.
The glasses now for CEOs have gotten a little more clear than they were before. They were these big, thick ones before. They couldn't really see through the lenses very well. And now they feel like they've got a little more clarity. Heck,
I don't think any CEO feels they have clarity.
I think they feel like they got a lot more today than they did 3 months ago.
We're talking different CEOs.
They could barely give. Well, you're talking to, you're not talking to the biggest CEOs in America.
I'm talking to some pretty big CEOs.
We're not going to get in a match about the type of CEOs we're talking about. But I know for a fact that guidance last quarter was way better than people thought.
Way better.
Most people expected no guidance whatsoever. Mm-hmm. Now, some gave two things of guidance just to cover themselves, but right. I feel like there's a lot more clarity today than there was 3 months ago. How can there not be? You can argue that?
I can. Where are tariffs?
Well, I mean,
you're a CEO. You're going to make $1 billion investment unless you're a semiconductor CEO and bringing it into the U.S. And that's going to be a long tail, right, to get those up and running. Do you have greater clarity in terms of what the tariffs will be, where your supply chain should be?
I feel like you have certainly much better clarity than you did.
Well, you know you don't want to be in
China,
but we saw some back. You
know what the rules of the road are with Vietnam, right? That covers a large swath of American business there. You figure something positive is going to come out of China because it has to for both parties, so the worst is off the table there.
Nobody's betting on China. Everybody's pulling their
I think
the worst has already been negotiated away.
The actions from this presidential administration show that they do not want the reciprocal tariffs that were put in place on April 2nd to go through. If they did want those levels, if that was their end goal, they would not have kicked the can down the road today and pushed it off to August 1st.